Gold futures on track for its best week since early April as rate cut hopes are lifting metals across the board. For more, we want to bring in Bob Iaccino of Path Trading Partners, co-founder and chief market strategist. Bob, it's great to see you. And so talk to me just about this rally, let's call it a rally, that we've seen in gold this week. We certainly have seen gains in terms of how much upside momentum is left, because you talk about the fact that clearly the Fed's path forward here is driving and influencing the price of gold, but you also have got the central banks around the world buying gold and that being a real driver here. So then what does that upside look like, if there's any?
Well, to your point, according to the World Gold Council, largest purchases ever by central banks, largest purchases on record. I guess in 700 BC, maybe a central bank then could have bought more, but for the record that we have, first quarter, largest central bank purchases. So we have that. The second thing we have is what I believe to be a reflation narrative just generally across the economy. And people think gold's an inflation hedge. It is not. What gold is a store of value or an asset. Anywhere you store money is an asset. Your home, land, the stock market. Now, that doesn't mean they come without risk, downside risk. All of those I just mentioned do, and gold does as well. To a certain degree, Bitcoin is a high beta store of value. Gold is the same. And if inflation is picking up again, which I believe it is, gold will rally as a function of asset inflation. We all complain about inflation. I do as well. I bought a bunch of steaks yesterday. Really pissed me off. But when you look at asset inflation that comes with it, those of us that own assets like gold, we benefit from that. So my target for gold is about 4.8% higher from here, very specific, 24.91. And if you get to 24.91, the speculator will probably push it to 2,500 just because they like those numbers.
So sticking with gold there, I'm curious, the Chinese central bank is slowing its purchases of gold. I wonder to what extent stateside buyers of gold, the people Brian Sozzi loves to talk about going to Costco, getting those gold bars, do they need to worry about that slowdown from foreign central banks?
That's funny. That's where I got my steaks. They don't need to do that as long as we're going to get this Fed rate cut. My job as a strategist is to figure out what's going to happen, not what the Fed should do or what markets should do, but what they're going to do. I think the Fed is going to cut rates. The probabilities are rising of that just based on market pricing. Cut rates. Did I say raise? Cut rates. And if they do, that will boost gold, because the only time that gold suffers in an inflationary environment, which I believe we're still in, and we're probably getting a little bit of an uptick on that, is if the Fed is fighting inflation. And right now, the rhetoric has pivoted to the opposite of that. So despite central banks slowing, China being the main one, as you mentioned, Madison, I don't think that's going to slow gold all that much. It's just going to slow the rise, but I think the rise will still be in place.
Bob, how are you looking at the pickup in buying that we've seen in silver, and a lot of that on the back of this rally that we've seen in gold?
Yeah, that gold-silver ratio can really widen out, but it really is sort of a tug on the rope from gold. And it's sort of an elastic rope, right? Silver will snap back. Silver gets looked at by a lot of speculators and people who want to store in precious metals as the poor person's gold, for lack of a better phrase. My biggest losing trades have been in silver. And it's simply because I don't understand the juxtaposition well enough between the industrial properties of silver and the precious properties of silver and which one dominates when. However, in a reflation narrative, when you're starting to see US PMIs, manufacturing PMIs specifically, go back into expansion territory, silver's now benefiting from both of them. Again, I'm not in it because if I get in silver, it'll be a losing trade. That's just the way it's been. But from that perspective, I think silver's playing catch up, but also benefiting from the environment that we're in because of that dual nature of it.
Right. Well, it's interesting because you are missing out on some of those big gains year to date, unfortunately for you, Bob. But
not the first time, Madison.
Not the first time for many of the investors who chat with us. But I'm curious, we're not seeing a lot of the traditional hedging activity that you think of when you think about investors who are concerned about the momentum of a market. We're not seeing people buying volatility, for example, with the VIX. Why is gold a better hedge?
Well, I don't know that it is a better hedge. Again, I think what it is a lower risk asset that could benefit from inflation and reflation. So really, I don't know that it is a better hedge for equities falling. It may not be at this point. But if equities were to drop, then you're likely to see the Fed cut more aggressively. And that would benefit gold simply on dollar weakness. Gold has probably 4 factors that move it in the short to medium term. 3 of those, in my view, are pointing to gold being higher. Now, I own gold, full disclosure, I've owned it since November 2022, so I don't want anyone to take that and run with it so that my trade gets better. I just think when I analyze it, there's only one way that gold comes out in the negative, and that's if inflation spikes and the Fed decides to tighten and fight it. Gold will suffer then, and I don't really see that happening in the near future.
All right, Bob, we're going to have to leave it there. Thank you so much for joining us. We really appreciate it.